Stop being the most underpaid person in your own company. You're doing 100% of the work, so why is the taxman taking the lion's share of the reward? If you're building an online business such as consulting, e-commerce, coaching, selling on platforms like Amazon or agency work, you already know the pain. Making money is hard. Keeping it feels even harder. And here's the scary part. Wait, if you're paying more tax than you legally have to, that's not a compliance problem, that is an information problem. I am hosting a free live webinar where I break down exactly how the Dubai tax strategy works, who it actually works for, and the mistakes I see people make constantly. The link is in the description, so go grab your spot before it fills up. Let's get back to the video now. Most people don't lose money because they're bad at business. They lose money because they set up their business in the wrong place and they don't even know until it's too late. Today, we're talking about chapter 3 of my book, Dubai Dreams and Tax-Free Schemes. This chapter is called Where in the World Should a Digital Nomad Go? And I'm going to do 3 things for you in the next few minutes. 1, I will show you the biggest mistake that makes digital nomads panic later. 2, show you why the famous list of tax-friendly places is not as simple as it looks. 3, show you why Dubai keeps showing up as a serious option, not because of hype, but because in many cases, it's clean, legal, and practical. If you stay with me to the end, you're going to think about business setup in a completely different way. One quick thing, I'm not your accountant, and this video is not a tax or a legal advice. This is education. Rules can change. Your passport, your family, your clients, and your home country ties all matter. So use this episode to understand the big picture and then get proper advice before you move, set up a company, or stop filing at home. Now, why does chapter 3 matter so much? Because a lot of people think business setup is just paperwork. Pick a country, open a company, done. That is fantasy. In the real world, your business needs a place banks will trust, a place clients won't fear, and a place payment processors actually support, and a place whose rules you can defend if someone asks questions. That is what this chapter is really about. Not zero tax, clean structure. Let me tell you a story about Sophie, a 32-year-old graphic designer from Spain. Sophie did what so many nomads do. She went fully remote. She bounced between Bali and Budapest. She almost made 12,000 euros a month. She thought she had cracked the code. Then tax season arrived and her accountant told her she owed over 35,000 euros in taxes. And Sophie froze because in her mind, she wasn't living in Spain. So how could Spain still have a claim on her taxes? Here's the lesson Sophie learned the hard. If you can't clearly prove where you live or have not cut ties properly, your old country may still treat you like you never left. And that's the nomad tax trap. And it's not solved by running faster. It's not solved by hiding. It's solved by choosing a real home base and building real proof. Does that make sense? So Sophie does what you would do. She starts researching the tax-friendly menu online. She looks at Cyprus first. On paper, Cyprus looks nice, but it's not automatically zero depending on the setup. Companies can still have corporate tax there, and the authorities may want real substance like real local presence to make it work. And that's a lot for a lean, fast, and online business. Next, she looks at Hong Kong. Hong Kong is famous for a local-only tax system, but then she sees the fine print, strict documentation, and often annual audits. And banking there has become much tougher for many entrepreneurs. Then she looks at the classic offshore islands like British Virgin Island and Seychelles. Yes, on paper, those can be zero, but then reality hits. Your client may get nervous, banks may get suspicious, and payment platforms may not support the structure. So your business gets stuck, and a zero tax company is useless if you can't get paid. I want you to forget for a second the old fantasy of shady island companies. Forget the idea that lowest tax rate is the whole game, because the real game is not cheapest. The real game is workable. And this is where Dubai enters the story. Sophie hears about Dubai and laughs. She only knows the social media version, rooftops, supercars, influencers. But then she hears a podcast with a consultant who moved to Dubai. And his setup is simple. A free zone company, legal residency, global banking, and clear rules. Sophie contacts a business setup firm in Dubai and she gets the roadmap. A company license, residency visa, Emirates ID, corporate bank account. And within weeks, her business operating smoothly without the paperwork mess she saw elsewhere. This is the first big message of chapter 3. You don't just want a lower tax, you want a system that actually works. Now, let me show you why the famous list of tax friendly places often breaks people. Meet Matteo. Matteo is an online sales strategist. He's growing, he's winning clients, but every year he watches profit disappear into tax. So he does what most smart people do, he researches. He keeps seeing the same places: Cyprus, Hong Kong, Estonia, Singapore, offshore islands, US LLCs. It sounds like a menu. Pick one, pay less tax, live happy. But Matteo discovers something most people won't admit. A setup can look good on a blog and fall apart in real life. Here's what happened. He followed YouTube advice. He ran a US LLC. He thought, I'm not in the US, so I'm fine. Then he landed a European client. The client asked for something simple, a tax residency certificate. His US LLC couldn't provide it. So the client withheld 30% of his invoice. And then Matteo found out that he missed a required US filing form 572. And the penalty can be huge. This is the moment a person realizes, okay, this is not a game. Matteo moves his setup to a Dubai free zone. Now, he has a proper business license, a residency visa, and the ability to apply for a tax residency certificate, a paper that proves where you are a tax resident through government channels, a multi-currency bank account, and access to mainstream payment platforms. No more guesswork, no more withholding, no more random penalties for forms he didn't even know existed. Wouldn't that reduce stress? Yes or no? And there's one more story from this chapter. Leo. Leo is a copywriter. He was getting paid through an offshore setup until he tried to scale. Then the problem started. Payment processors asked questions, funds got frozen, client asked for documents he could not provide. So Leo did what most people do at that stage. He stopped looking for clever and started looking for clean. He moved to Dubai. 1 month later, he had a license, bank account, and residency, and the business stopped feeling fragile. That's the pattern chapter 3 keeps showing. Zero tax means nothing if your business is unreliable. And this is the part I want you to tattoo in your brain. You're not really hunting for zero tax, you're hunting for 3 things: clarity, trust, and proof. Think of it like a 3-legged stool. Like 1, tax rate. Great. Like 2, residency. Can you legally say that you live somewhere else? Like 3, proof. If a bank, a client, or a tax office asks questions, can you show documents and a consistent story? If any leg is missing, you wobble. And when you wobble, life becomes stress. So stop asking where is the lowest tax. Start asking, where can I build a clean base that works with the banks, clients, and rules? Now, let's talk facts, not TikTok fantasy about the bank. Fact 1, personal income tax. Right now, the UAE does not levy federal income tax on individuals. So salary and most personal income is not taxed the way it is in the UK or much of Europe. Fact 2, corporate tax exists, but is still competitive. The UAE corporate tax system has a 0 rate on taxable profits up to AED 375,000 dirhams and a 9% rate on taxable profits above that. So yes, corporate tax is real, but it's not designed to crush small businesses. Fact 3, free zones can unlock 0 corporate tax on certain income if you qualify. A free zone company is not automatically 0 forever. To get a 0 rate, your company must qualify as what the law calls a qualifying free zone person. Then it can get a 0% corporate tax on qualifying income. And if you earn income that is not qualifying, that part can be taxed at 9%. Translation in simple English: Dubai can be 0 for the right business, but you must play by the rules. And here's the part most people miss. If you stop meeting the requirements, you can lose that free zone 0% status, not just for 1 year, but for years. Fact 4, small business relief exists, but it's time limited and not for everyone. If you are a UAE resident business and your revenue is not more than 3 million dirhams, you may be able to choose for small business relief. If you qualify and you choose it, you are treated as having no taxable income for that tax period. But this relief is only available for tax periods on or before 31st of December 2026. That means if you want to benefit, you can't think about it someday. You have to plan. Fact 5, VAT is a real part of business life here. The UAE has VAT, and if your sales and imports that count for VAT exceed 375,000 dirhams and above, you must register for VAT. So if you're selling into the UAE market, you need to understand VAT early. Now, let's talk about the part that changes everything: residency. Dubai can give you legal residency, and residency is not just a visa sticker, it's a paper trail. And the UAE has written rules to determine the tax residency. One clear out is spending 183 days or more physically in the UAE in a 12-month period. There is also a 90-day route for certain people, depending on conditions like having a UAE residence permit and having a home or a work in the UAE. Once you qualify, you can apply for a tax residency certificate, a paper that proves where you are a tax resident, through Federal Tax Authority. And that is why serious entrepreneurs like Dubai. Not because it's mysterious, because it's provable. Now, picture yourself 6 months from now. You wake up in Dubai, you open up your laptop, client payments hit your UAE business account without any drama. You have a real license, and you can show a bank, a client, or your old tax office a clean story. How does that feel? That peace of mind is what most people are actually buying. Before you run off and open a company, here are a few things you need to know. First, decide what you actually are. Are you an employee working remote, a freelancer, or a founder with a scalable company? Different paths, different rules. Second, choose your setup path. In Dubai, you usually choose between free zone, mainland, or a remote work visa route if you work for a foreign employer. If you pick a free zone but also want to sell directly to mainland customers, you need to know that Dubai has issued an Executive Council Resolution number 11 as of 2025. It created a framework where many free zone companies can operate in mainland Dubai by getting a branch license or a temporary permit under the Department of Economy and Tourism, and by keeping separate financial records for those mainland activities. Third, understand that staying legal is now adult life. This is not 2012. Government want paperwork. For example, starting the 1st of January 2026 amendment to the UAE tax procedure law set a 5-year time limit for you to request a refund or a credit balance from the Federal Tax Authority or use it to settle your tax liabilities. Translation: you can't be lazy with your records and expect to fix it later. And if you're a content creator or an influencer, listen closely. From the end of January 2026, content creators in the UAE are required to hold an advertiser's permit to post promotional content, even if it's unpaid promo, and penalties can be significant. Finally, and this is the big one: exit your home country properly. Dubai can reduce tax, but it's not magic button that cancels your home country rules. If the UK still treats you as a resident, the UK may still tax you on your worldwide income, and other countries have similar tests. So if you want clarity, you must build a clean exit, not just a fast exit. So here's a summary of chapter 3. The internet sells you perfect offshore, like a fantasy. But when you scratch the surface, you find government that still claims you, banks that won't touch you, clients that hold your payment, and a tax season that feels like fear. Dubai stands out because it offers something rare: a balance of lifestyle and legitimacy. It's not just low tax, it's reliable banking, real residency, and a structure you can defend. Does that make sense? Now, I want to hear from you. Drop a comment and tell me what's your biggest fear or question about setting up a company in Dubai. Is it banking? Is it visas? Is it cost? Is it corporate tax? Or is it how do I exit my home country cleanly? Ask your question in the comment. I read them and I pick topics from your questions for future episodes. And if you want the deeper strategy, the stories, the framework, and the step-by-step thinking that I can't fit into this video, then it's the book. In the next episode, we'll cover the next chapter where we will turn this into action. We talk about how people become legal residents, what the process looks like, and what mistakes to avoid. So, like, subscribe, and stay tuned, because the goal is not to save taxes, but the goal is to build a life that works.